And let's get in Devu Bhattacharya, MD of Hindalco, who joins us right now on the show to speak about all that's happened with the company in the quarter. Good having you, Mr. Bhattacharya. Thanks so much for joining in. Your PAT has taken a dip of close to 4%. Just summarize that quarter for us. What's led to this performance?
There are three adverse factors. One is after the Q1 blackouts that we had in our smelters, it did take a bit of time to come out of it, and October and November were to a large extent impacted by that. But by the end of December, we exited the quarter very well. So that is behind us. The other factor that which had an impact was higher interest cost, the finance cost. Of course, going forward, this will only go up. The third factor that we have been able to reduce cost through some of the focused cost-effective measures, which will be with us going forward. And if you compare our performance at aluminium, 10% of PAT, profit after tax, which is what you are referring to sales, must be miles ahead of any aluminium company anywhere in the world. So it is very good by any standards, but you are right, we have been 4% lower than the corresponding quarter last year. But if you look at sequential quarters, we have been improving very smartly. Actually, the increase over Q2 will be around 30% plus.
Afternoon, Mr. Bhattacharya. Now, your operating margins have dropped substantially on a year-on-year basis from to 8.5% from almost 11%. What were the factors that impacted your margins, and how do you see them shaping up now?
There are two major factors. First is the LME, which was around 2,400 Q3 last year, is now 2,000 something, 2,050 or so. So $400 per ton is a lot of money. Second, the input costs, particularly the energy costs, have gone up very substantially. These are the two factors which has impacted our overall profitability.
Mr. Bhattacharya, other income of over 300 crores, that's quite high. Can you just shed some light on this?
Yes, 318 crores primarily has, as I explained to you, a write-back. And secondly, the treasury earning has been higher. Earning has been higher because the treasury, the corpus has been higher. Now, total of 318 crores, is it going to last? I don't know, but it's not going to disappear in a hurry.
And your other income also of over 300 crores this time around seemed to be rather high. Can you throw more light on that?
As we capitalize, the interest cost will go up, which you are calling finance cost. But remember that this will also generate an EBITDA line. So when we capitalize, we will be producing alumina and aluminium. And they are all very attractive businesses. And therefore, what is the interest cost, your EBITDA will more than make up. So it will, yes, interest cost will go up, finance cost will go up, but there will be a commensurate, if not more than commensurate, EBITDA line coming through.
So you spoke about the EBITDA performance and that being in line. When is that expected to kick in for your expansion projects?
As I explained to you, the production trials will start from March, April, and there will be a ramp-up. Exact ramp-up will depend on the experience that we have. I think next quarter, this time, I should be in a position to tell you.
And finally, Mr. Bhattacharya, what kind of a volume growth is expected and in what period?
That is, when it is in full capacity, steady state, the capacity will be 1.5 million. And the metal production will be 750 KT coming from this. But that is not going to happen in month 2 or month 3 or month 4. It will happen over a period of time. I am saying in fullness of time, when steady state is reached, these are the capabilities of the plant.